So the question then in terms of, fact check number 5 is who benefits the most? And so what we want to talk about here is, again, this is the story about sort of the narrative for the typical Australian is trying to get a sense and understand what's going on here. So here's another example. This time it's from The Guardian, but I could also find this in the New Daily or in The Conversation, in terms of these publications which are advocating for changes to negative gearing and capital gains tax. And that's why I'm hoping that the journalists are obviously listening to this as well, because when you see stories about how the most affluent Australians disproportionately benefit from negative gearing, they're making an argument that the people who are earning the highest income get a greater share of tax deductions. Now, that is true, okay? But the misinformation here is thinking about the scale and the size or the number of those people on very, very high incomes versus the greater portion of what we call and what is our community, which is everyday aspiring Australians. That's who we love. That's who we talk to. That is not the case for them. So I thought I'd just give you a bit of an example by just showcasing how our tax system works, and it's a scaled system. So as you earn more, you pay more tax. So you can see there in terms of 16 cents and then 30 cents and then 37 cents and then 45 cents as you earn more. So if we're talking about a typical individual on $200,000 a year, they are paying on average around $60,667 in deductions plus $4,000 in the 2% Medicare levy without any other deductions associated with that. So I think it's an important point to say, okay, yes, they are definitely going to get the highest deductible amount back in terms of percentages, but are they ultimately the bulk of the people who are doing that particular work?
And the point really is that people who are earning higher incomes aren't just getting the upside of being able to access better tax deductions. Yeah. They are also paying more tax. I think that's the important part of that.
Huge amount.
It's not an advantage at the top without actually having to contribute. They're contributing, you would see, compared to someone on a lower tax bracket, a higher proportion to the services we all benefit from.
Correct. Now, so hence, again, this is about winning the narrative, winning the story, to the general public of Australia. So they go off and then quote that only 5% of all taxpayers, so effectively, people who earn over $180,000, that's 5% of our tax base, right? So 5% of our people who are submitting individual tax returns, but they're receiving 24.87% of the benefit is what they're saying. So they use an example in this particular article that, Australians earning over 1 million or more are the largest loss per person, each claiming on average $28,000. Now I'm thinking, well, everyone might be thinking, oh, shock horror.
Yeah.
$28,000. That is a lot of money that they're getting back from the taxman. That's unfair. But what they fail to mention in the article, that same person who might be earning $1 million or more is just paid $420,000 in tax and a $20,000 Medicare levy. So they are getting 28% or $28,000 back, or 6.5% of that back. So in theory,
440 out.
Yes.
28 back.
28 back.
Let's land that plane.
And $412,000 to provide schools and hospitals and that. And you might be saying, well, they should because they earn that much. Well, I think that that's not the way Australia needs to operate. Australia needs to reward and think of those people, they're aspiring Australians. You don't just earn $1 million for being a nice person. You do that because you're very skilled at what you're doing, or you're very talented in terms of adding value and being productive in society. So ultimately, I think it's disingenuous of them to basically be talking about this particular story. And you go.
Sorry, going. I was just thinking $1 million is available to the majority of people to aspire to.
Correct.
So I get that some people have assets that help them contribute to $1 million, but it's not like it's an exclusive club. If you can develop your skills, you can learn some knowledge, you can do something with your hands.
Yeah.
Number one, someone who earns $1 million is definitely an outlier in this country.
Oh, well and truly, it'd be in the top 1 or 0.1 of 1%. Yep.
But it's not an exclusive club.
No.
People can get there if they committed to whatever it takes. I get on the asset side, it's a bit different.
So what we wanted to do is basically we're going to have a look at some of this ATO data because it's so rich. It tells us so much in terms of what that story looks like. So I'm just going to attempt to move across into our platform. And so here you can see this is extracting all the 2021, 2022 ATO data. And what I wanted to highlight for everyone here is what we're seeing in this particular chart is the income brackets of the people who submitted a tax return. So let me explain. So but you can see there were 5.3 million people who submitted a tax return where their income was between 45 and 120,000. And what you're seeing here is of those, 13% of them have at least one investment property. So this is the stuff that they don't talk about in those particular articles. And that's why I get annoyed, because you can absolutely see that, yes, obviously of the higher income earners, a lot more of them have investment properties. That is true. But what you're also seeing here is that the bulk, so if we take out the total here, you can actually see the number of people who have investment properties, all 817,000 of them. The bulk of their income sits between 45,000 and 120,000. Now, to me, that is all about the aspirational story of everyday Australians who aren't going to rely on government to actually get their pensions. They're going to basically self-fund their retirement. They're going to build financial security. And later on, we're going to take a look at some of the profiles such as nurses, teachers, and those types of things to sort of give that story more context, because that is lost in the story that The Guardian is producing as part of a self-interest narrative to try and get negative gearing and capital gains tax reforms.
So that's a classic bell curve that you're seeing there, Ben.
Yep.
So what the narrative is saying, let's go after the outlier at the expense of the middle of the bell curve. If you make the narrative about the greedy people on the top tax bracket, you take out the important middle who are actually, let's be honest, Ben, these people who are negative gearing, yes, they're getting tax benefits, but if you understand property investing, you know that they are not actually in positive cash flow territory. No. They're actually forking money out of their own family budget that they could spend on higher school fees, or they could spend on upgrading the car, but they're choosing to do hard now for easy later.
So, Bryce, everyone's sort of blaming the investor and in terms of the tax benefits they get, but unfortunately, or fortunately, depending on where you live, in this very interesting report, which we're going to take a little bit more of a deep